Hello, everybody, and thank you for joining me today. It's Allan Laboucan with the Rocks and Stocks News website. Got another of our friends of the show, sponsor in Mario Stefano with Galantas. Originally, I started following Galantas. I caught their early drill results. I was very impressed with the high-grade gold and also that they're in Ireland. I had only picked one company in the past in Ireland, which was Dilution. Started them at about 25 cents, which is where I started following Galantas, and they ended up getting bought out at several multiples of that. And I think that Galantas is on a similar path to success. Since then, they've had a bunch of news releases out that they keep hitting lots of high grade. Like just last week, they announced 21 grams of gold and 32 grams of silver over 2.4 meters, 16 grams of gold, 26 grams of silver over 1.5 meters, 7 grams of gold, 13 grams of silver over 3.4 meters. In these high-grade systems, I like to see continuity, and that's what they've got. Mario, thank you very much for joining us.
Well, thanks for having me again, and I just want to say I like your setup.
Thank
First
you.
time I've seen the new setup. It looks great.
Yeah, well, I got this beautiful desk from here in Mexico.
Fantastic.
It's actually recovered wood from the ocean, so they do a great job.
Nice. Beautiful.
That at a fraction of what it would cost me in Vancouver or Toronto.
Oh yeah, look, I bought something as well from Restoration Hardware, and it's recovered wood, driftwood, I guess is what they call it. But yeah. I got to tell you, I think yours looks way nicer than mine.
Thank you very much. Well, I certainly am impressed with your drill results, Mario, since I started covering you. And I wanted to add that I didn't start covering you because I thought you guys might be a double. Which it's at right now, and it's been a triple or better since I started picking you. But I think you're a multi-bagger kind of story that's just getting out there to the world. You guys got to be impressed with these results you keep on banging out.
Yeah, and you know the results you just went through, those were the last 4 holes that we drilled. And what's really important in that set of results is the new dilation zone that we identified at the main Kearney vein, as well as all 4 holes hit the C lens. So, you know, we're getting not only the main vein at Kearney or Joshua, but we're getting multiple parallel lenses that we continue to, that's exactly, you know, these veins are 70 to 80 degrees, 65 degrees. They're very steeply dipping veins. And as you pointed out, we're getting a lot of good continuity in our drill holes. This is not a nuggety system. So prior to that, I'm sure your readers and viewers would have seen, but we drilled 7 meters of 31 grams gold in a dilation zone. We also drilled 2 meters of 71 grams in the B lens, another parallel lens. Prior to that, we drilled 13 meters of 17 grams. So we know we're getting some high grade hits here, but just as importantly, it's becoming quite a little bit more predictable of where we think these dilation zones may be occurring, and it's to do with these cross faults. And Sarah Coulter, who is our chief geologist and has worked at site for some time, she's done a good job. You wouldn't have seen them all, obviously, but we've done a pretty good job now mapping out where we think these dilation zones are, and they're clearly open to the south. They're open down dip and down plunge. So we're pretty excited because we think we're going to continue to grow these resources as we drill more.
And I think it's important for investors to understand that this is an orogenic gold system. And in these orogenic systems, you get these big cracks in the earth that go down very deep and continuous. And it's often in these cross structures where they meet that main fault, where you get an opening of the rock that allows the fluids to flow in there and get these jewelry boxes. And, now you guys are still very close to the underground workings, but you're getting a picture of what the geology looks like, so you can map out those cross structures and the main zone. And the predictability is very impressive.
Yeah, no, exactly. And what I find quite interesting, and I'm not a geologist, as you know, I got a finance background, but what's unique about our deposit is we do get lead with silver, and then it looks like we had multiple, or at least two sequences coming in, and that's why we get this high grade gold with the lead. So we think the second phase of fluids coming up from the source intrusion, which we think could actually be to the south, because there is some indications from the magnetics that there is potentially the source to the south, which that in itself could be exciting, because we haven't even tested any of the other targets on site that we have within our large land package. But what makes us quite unique, I think, relative to Dalradian, and combined makes us really unique, is that Dalradian is a world-class asset. It could be up to 9 million ounces at 13 grams, which is clearly a world-class asset. We think we have potential to be a multi-million ounce deposit. If we can get to anywhere near that range, I'd be extraordinarily excited. I think all our shareholders would. But what makes us unique is that we have a slightly different mineralizing event than Dalradian, where they have more traditional quartz vein. We have this lead. We have a couple of phases of fluids that have come up, which I think this is really what you want to see in a camp. And that's why, if anyone had the opportunity to listen to John Arthurs and Sarah during this tech session we had, we truly believe we're in a major district here, and we're just starting, because we've only had two companies that control probably, we control 550 square kilometers, and I think already might control some like 250 square kilometers. Don't quote me on that number, but they have a sizable land package to the north as well, and that's it, just us two. And I don't know anyone in the Timmins camp or the Kirkland Lake camp or any, in Nevada, any of these major camps where you have two companies that control the district, and we control the district.
And another similarity, so there's the similarity to the Fosterville mine, the Swan Zone, and the potential to find multiple jewelry boxes like the Swan Zone. But another parallel is the fault, the main fault that goes from Ireland, it goes all the way over to Newfoundland, where all that excitement is about newfound gold and others in that area. Where you have a huge difference to them is you get that picture, that snapshot of what things look like at depth. And they have to poke around for predictability. You guys can see it in the rocks.
That's exactly it. And as Eric Sprott said he thinks the Queensway project in Newfoundland may be one of Canada's biggest discoveries. They must have drilled well north of 150,000 meters now. Our drill program is 4,000 meters, and we probably now drill 3,000 meters. And you can see the hits we're hitting, right? Because we're starting to understand these dilation zones. And as you point out, maybe where these jewelry boxes may open up. But I really want to remind everyone, the deepest hole at the Kearney vein is just over 300 meters vertical depth, and at Joshua it's around 200 meters vertical depth. And these systems, as I said, are open down plunge to depth. What's really interesting here as well is we believe that the gold will be in this, what we call this Covenant member unit, and to the north of the Kearney vein, when Rio Tinto was doing some work here in the 80s. They did quite a bit of surface sampling, and they would get up to 30 grams of gold from surface. They drilled maybe 3 holes, but they're all very shallow. And we've been spending some time looking at it. And now we understand why, is because they actually never drilled through into this member unit where we think all the gold will be concentrated. So that's going to be next, or obviously next year, we'll be targeting the North Kearney area, because if we can show that these veins are open on strike, on depth, and we've now got over 3.5 kilometers of strike to the east and west. This could be another major system, and we're of the view of that. But I get it; the market needs to confirm that we're in a major system here. And but as you pointed out earlier on, Barry Allan, now's the time to be investing in Galantas. Not when we've proven it up, because I think all signs are pointing to being on a world-class district here. And if we get to that 8 million ounces or 9 million ounces, even 3 million ounces or 2 million ounces, I would sure as hope that we're not at the 50, 60 cent range. We'd be a lot higher than that.
Well, another thing you brought up there is the strike. If you get 3 or 4 kilometers of strike, that is indicative of, you can multiply that by 3 to 4 times of the depth potential in these orogenic vein systems. And
Yep.
another exciting thing is, for example, at Fosterville, they mined for 20 years near surface. And then they got down to the Swan Zone, and that really was a company maker for Kirkland Lake. And there's a potential to find multiple more veins, because you've got these things coming up. You got 4 of them near surface. I think it's 4 or something like that near surface.
Yep.
And there's potential for finding a bunch more of these, plus then understanding all the dilation zones, all the potential for jewelry boxes. Your numbers there are not dramatic arm waving.
No, I don't think they are at all. And the reason I'm able to say that I'm confident we have a multi-million ounce deposit, again, drilling will have to demonstrate that we have potential for that multi-million ounce deposit. But that being said, in 2015, Sarah Coulter and along with the former CEO, who's also a major shareholder here, issued a report on 43101 report. You can find it on CDAR. It really just talked about what they see as the potential, and they were looking just at shallow style drilling. They identified between 2 to 5 million tons. Well, and that is on 16 veins that haven't really been drilled, other than some surface showings, 1 or 2 holes here or there. And she said, based on what they saw, they already saw potential for multi-million ounce deposit. But as you continue to extend that to depth, and also identify and start factoring in those additional veins and outcropping or soils or geophysics, all the work that's been done in the area on this 3.5 kilometer trend, I would not be surprised, if we're talking again, hopefully we will be in 3 to 5 years, that, we've demonstrated that multi-million ounce potential here.
Well, you got an orogenic system, you've got high grade, you're just starting to get into that harder, more competent rock. You can see that in the when you're underground, and that helps to the predictability. So, I mean, you're just getting started on a few of what could be a cluster of veins that go very deep and have potential for multiple jewelry boxes.
And as you said, when you look at the core, because this is an orogenic system, but at the same time, as I mentioned a little bit earlier, we had multiple phases from the source intrusion coming into this area. And if we can find that source intrusion, and maybe we can find a jewelry box around that area as well, that'd be quite exciting. But before I get myself too excited about that, but when you look at our core, we actually do get master sulfides. So we know we have grade. We're not looking for nuggets. And I think this is what makes us quite unique. We're not looking for, a 400 gram hit over a quarter meter, and then you hope you're going to get 1 or 2 grams and find something else with some BG. You alluded to it as well. We get great continuity in the system. Everywhere we drill, we're getting grade. So there's no dead zones in our vein system where we get, some great grades and then, 0 or 1 gram for 10 meters. So when you look at the big picture here, when this mine is operating by the end of June, this is going to make our life a lot easier. Not only are we going to be able to start factoring in some of these parallel veins, which will bring down our mining costs, we're going to be starting small. We're going to understand the system. We're going to understand where these dilation zones are, and we're going to continue to drill as we generate cash flow from operations, which I think makes us quite unique relative to all the other juniors out there.
Well, that's tremendously exciting, because not only can you see the main fault, but you're going to be able to see these cross features and being able to use that to drill ahead of yourself. We talked before we started, Mario, you were talking about at the recent Vancouver Resource Investors Conference, you said you were talking about the way that companies used to be built into majors, drilling enough to start mining and then using your truth machine to keep building ounces to go after. And I think that's worth touching on, Mario, because it's a recipe for success. that not
It
many
is.
are following anymore.
I agree. And look, I had some great speakers ahead of me with Rick Rule and Tevi from Crescat, and talking about the Fed and the amount of money printing and the US dollar, et cetera, et cetera. And for the first 5 minutes of my presentation, I followed right after. There was one speaker before me, but there's a pretty big crowd there, and I didn't want to go my traditional Galantas, and I really wanted to, and it hit me as they were speaking, because I was there for about half hour before I was supposed to go on the stage. And what I was trying to relay is that I think we've fallen as an industry, particularly on the junior side, and even the majors to some extent in the mid tiers, we've fallen on that same trap where we've started to believe all the easy money that we're supposed to be against as gold companies, right? We recognize the amount of liquidity being pumped into the system, but we started to take that on as well, because you look at some of these projects out there, great projects, they could be 3, 5, 10 million ounces, whether you're in gold or copper or zinc, but the CapEx now, there's these 3, 5, a billion, 2 billion, 3 billion. In today's world, nobody could actually raise that money. I mean, back in 2009, when I joined Lakeshore and I had to raise 50, 60, and we had to raise the capital to put into production, we had to raise a total about 180 million was all said and done over a couple of phases. That was extraordinarily difficult. And I would say money was easier then than it is now. So really, I think we fall in this trap of, we think this endless money is extending to our industry, and it's not. I think as CEOs and as investors, we got to take a step back and really look at proving up your deposit. Don't get these big CapEx blowouts. I'm sure you've seen it, Pure Gold, Argo, and Heart Gold. A number of them have these big, massive
Especially
CapEx blowouts.
now, Mario, when your inflation is causing you to blow out you can't bring them in on time and on budget, because you don't have the people, and you don't have and you have inflation. So
Exactly.
some of these things are getting nightmare overruns.
Yeah, so I'd much rather be in a situation where I need an extra 2 or 3 million because of some CapEx increases or cost inflation increases, rather than having to go to the market and ask for 20, 30, or 100 million, because I just don't think that's going to work in today's environment. And really what we've become is an exploration arm for the majors and the mid tiers, without our shareholders really reaping the benefits of a discovery, because they're constantly diluting.
Yeah.
Right? So we're trying to do this the old way, the old timers. All the major discoveries in the world have been done. I shouldn't say all of them, but the vast majority of the major discoveries in the world have been found this way. You mine at small scale and you continue to build, demonstrate your project. You've got a district. I'm in no rush to get to 200,000 ounces. The gold's in the ground. It's not going anywhere. I'm the only one that can mine it. So why do I need to pull out 200,000 ounces on day one, where I can pull out 20,000 ounces next year?
Plus,
as an
you
example,
don't have to dilute yourself like
I don't have to dilute
all
myself,
these preliminary economic assessments and
everything. It's crazy.
Studies.
And even with Doré Copper, your readersman, I'm also the chairman of Doré Copper. It was the same thing. Our CapEx at Doré Copper came in at 180 million Canadian, and the NPV is about 330. So great NPV pre-tax. But we could have built a shaft at Doré Copper, and but our view was, why would we spend 150 million dollars to build a shaft? Yes, you may get a faster payback, but we were quite happy with the 3.5, 4-year payback at Doré Copper, because the CapEx is all sustaining underground development year after year. But the risk profile of the company is significantly less, because the capital outlay is the mill expansion, and the capital outlay is 50 million contingencies, right? And the rest is just regular underground development, like the Australians used to do. I used to also be involved with the lead mine in Western Australia. Australians, I think, got it the right way. They got some of the best value in the market for their projects, because Australians don't really spend $500 million building these gold projects. They start small scale, prove it up, and then get back at it. And if you can demonstrate a world-class discovery, you're going to get paid for a world-class discovery.
Well,
with real share price appreciation.
I hope people aren't lost on the fact that you have the experience. You're speaking from a voice of experience. Lakeshore was another pick of mine that is in my list of picks that turned into mining companies or takeovers. And you've done it before, Mario.
And I've raised well over 800 million in good times, bad times, and most of them have been bad times. I'm being quite frank. Raising money is not easy, and it's even harder when things are difficult. Even though you may be extremely bullish on the metals, but money's tight in this kind of environment. So where you think you've got a great project, it's not necessarily being reflected in the share price, because people want to rotate it into oil and gas or banks. But when people see their tech shares or their crypto, if someone believes in crypto, I don't know why you would overgo, but obviously some people do. When that liquidity and your value start to go up, the rotation happens, but it takes a little bit longer than we expect. So you got to be patient, and you got to raise money in the least dilutive way you can without really putting your company at risk. Because at Lakeshore, we tried to raise equity as much as we could. When things were tough, we did convertible notes, anything we could to try and limit the amount of dilution without really putting the company at risk, recognizing that we didn't have a feasibility study. So as you said, I've raised royalties, traditional project finance. I've done it all with private equity. So I've seen it all. And I recognize small projects, I think, create much greater shareholder value than the larger ones. And I think silver companies are a prime example of that. Because if you look at the silver companies in Mexico, there's not many great big silver companies out there, and they trade at huge premiums. It was hitting me during this whole Rick Rule and Crescat discussion that why do the silver companies trade at these massive premiums? And I always thought, because people believe
they build it, they get cash flow.
Yes, right. So I was always under the view that Americans love silver, and it was lower cost precious metal, and that's why they're willing to pay a lot more for these silver companies at a big premium. I actually think it's the reverse, where they were paying these silver producers and developers a bigger premium, knowing that there's a lot more silver in the ground and recognizing they're going to recover it without the level of dilution, where the gold companies felt we have to start at 150, 200,000 ounces on day one. So now it hit me on this whole discussion. Sometimes you got to be at the right place on the right time. So I think this strategy we have with Galantas, start small, raise capital if you need capital. I want to keep this thing as tight as possible. We have 7 million of warrants still in the money. I'd love to get those exercised. We have very supportive shareholders. I think Galantas, if we can execute on our strategy, and we have the team on the ground to do this, I think we're going to trade at a premium relative to other gold companies, because as we drill, as we produce, the market's going to recognize we're going to have much less dilution than others, while at the same time, we are not going to be having to drill 150,000 meters a year to prove we have a world-class asset. It's going to come out of the ground. We're going to be drilling from underground. And this is where you want to be as Galantas in our project in Northern Ireland.
Mario, something that I've often used as an indicator is dilution of the stock as an indicator of the business plan of the management that's running the company. You have that in spades as well. You only have 83 million shares out, $36 million valuation, and you're on the cusp of becoming a miner of high-grade gold that has a high margin. High margin is good.
High margin, right next to a 6 to 10 million ounce deposit 20 kilometers away at Dalradian. As you said, we already have over 500,000 ounces in the resources. We've drilled 3,000 meters with better grades and better widths than the traditional since the last resource update in 2014. I'm pretty confident that when the market starts to recognize what Galantas has, and it's we're in the environment where people are investing in tech and crypto, but I think today I read something, and I believe it was from the head of the IMF, and believe what all the various governments, but it was really her statement that really caught my attention. And basically, I think what she said was something along the lines of, never before has the world economy had so many potential fires or crises flaring up all over the world. And the last time this may have happened was around World War II. Put that in perspective. We're hearing about all this, but yet stock markets are at all-time high or close to all-time highs. I know the US has come off, but it's still, even 20% decline is still pretty close to all-time highs. And if we are entering into this phase of the unknown, and markets love certainty and they don't like uncertainty. So I truly think we're entering a phase of true unknowns, whether it's, quantitative tightening. And I've started to change my views on this. Barry, where in the past, I've had discussions and I was convinced that the Fed will not raise rates, or they can't raise rates all that much because the American consumer can't afford it. And I knew inflation was coming, but I sort of always figured they would not be able to raise rates all that much. But I think what's changed my mind recently is the war with Ukraine and Russia, where the US, in order to continue being seen as the dominant player from a military perspective, economics, they've got to get their economics back in order. And if the US were to revert back to quantitative easing, I think it's going to accelerate a decline of the US currency. So I really think they're going to continue to tighten, whether it's with quantitative tightening and or interest rates, which I think is going to put us in an extraordinarily difficult position in the Western world, because how do you then compete against some of these other economies? I'm just taking a real big picture here. Latin America or Africa, these countries that don't have the best economics, they have significant deficits. How does the US then justify them having a significant amount of money printing without generating the revenue to cover their expenses? I mean, we're really putting ourselves now at that point in time against, the developing world, which is nowhere where the Western world wants to be. In Russia, I mean, obviously, no one ever wants to see war. I'm not in favor of the war. I want to make that very clear. All I'm trying to say is what this has done, I think, is accelerate the differential between those economies that are using commodities such as oil and gas, gold, copper, nickel, to backstop their economies and are producing things, versus economies that became service economies that can't cover their expenses and not have that manufacturing base or that commodity base that everyone else is looking for. So 4 months ago, I was of the view that they wouldn't do it, but I'm really nervous now, and I'm really bullish on gold even more than I was back then.
Well, Mario, what you're really alluding to there is that all of these countries have to harden their currencies. Yeah. And hardening your currency requires you getting gold. I would think that not only gold, if I was trying to harden my currency right now, I'd be buying gold, silver, copper, other things that are going to be required to harden those currencies, and also follow the trend of where things are going to move away from fossil fuels into electric.
Exactly. And not only, and you've got to secure your own supply now, right? So that's the other thing. So all these commodities now have to be mined in the country. And you would think, well, the supply is going to be overwhelming, but most of these projects could take 10 years to come on stream. And whether you're
billions of dollars.
And billions of dollars, as we allude, exactly. That's why these stories like Galantas, and people always forget gold mining. Most of the gold comes from copper mines, right. Copper porphyries. So, everyone needs copper. So, by the time these $1 billion, $2 billion, anything in Latin America, with some of the issues down in Latin America, the US, the Western world, needs to secure our own supply of metals. And that's what China's been focused on. They've got a 100-year timeline in some of their strategies, where we've gotten to this quarter timeline. And I think we've fallen really behind on really securing our economies for the future. And I think you're going to see, and you're starting to get that sense now, even in the US, in the Western world, that even in Ireland, we had a prospecting license granted in the southern part in the Republic of Ireland. And, it's just a prospecting license. We want to look for base metal. We think there's real potential there for copper. But I think the recognition is every country, we can no longer export responsibility for the basic materials that everyone in the Western world utilizes to the developing world, because number one, we have far better controls and regulation over mining activities than the developing world. We don't use mercury like they do all over Latin America when you're trying to recover gold. We should be taking control of the mining activities, not exporting the responsibility to other countries that are not going to be in, following the regulations as we were in the Western world. And I think Western governments have woken up to what this means, and this energy crisis is going to accelerate it and not deaccelerate, I think, this move.
I don't know if Robert Friedland watches my shows or not, but you're making a strong case for what he calls the revenge of the miners. I think we've got to go back to that
Yeah.
old-fashioned way of building things, that old-fashioned way of securing economies. You need raw materials. You need precious metals to back up your currencies, especially when you're printing them like it's going out of style.
No, exactly. And look, I worked for Robert at Cordoba, and we had a great project. We still, Cordoba still has a great project in Colombia. And Robert is probably one of the smartest miners, geologists combined in this industry. I mean, Robert really set the path on how to find some of these world-class deposits. Obviously with Voisey's Bay and Oyu Tolgoi, but those again were multi-billion-dollar projects. I'm not sure what Robert's going to be doing today if he finds potential for another world-class asset, but I bet you today Robert will want to control 100% all the assets he's able to find. And he never told me this. I'm just speculating, obviously, but the revenge of the miners, as you pointed out, is really going to be the revenge of the miners, because in order to cover a $10 billion copper project, you probably need copper at $10 to $15 a pound, not at $4 a pound.
Exactly.
No one's going to make money, right? So we should be mining, getting ore out of the ground, whether it's copper, whether it's lead, whether it's zinc, and finding these world-class assets. And we should be very well aware that metal prices are skyrocketing in the future. They're not coming down. Miners can't continue to produce if you're not making margins. Money. It's just money.
And right? Maybe that's the most bullish argument out there for a lot of these commodities that they need, is because, like in gold, for example, a lot of them are starting to creep towards $2,000 all-in sustaining costs. Well, you either stop mining gold, which drives the price up, or the price goes up and you can make money at $2,000 an ounce. So that's making an argument for $2,500 to $3,000 an ounce gold. And you can apply that to all the other metals you just mentioned.
No, exactly. Margins have to go up. They're not going to be squeezed. You might get the short-term squeeze with a fear factor in the world, but I think this big rotation, and you're starting to see it now in the S&P, there's a big rotation occurring from tech into oil and gas, energy, and banks.
And agriculture.
And resources. Yeah, agriculture. It's what we need to survive. I love technology. We're talking on Zoom. These are core things that made our life way better. So don't get wrong, I'm not dismissing the importance of technology, but in order to really excel in technology, you still have to provide the basic necessities to feed that technology, which is metals.
How do you have technology without copper and gold and silver, for that matter?
Yeah, and you've heard Elon Musk. He's considering looking downstream, and he's never going to dismiss owning some mines, whether it's lithium mines. I'm sure that's probably what he's thinking, or maybe it's copper mines. I have no idea. But if there is a significant if Tesla can't get access to lithium or copper because someone in Latin America or the Western world or anywhere just says, you know what, we can't export this material. If you want to build your Teslas, you have to build it in Canada, or you have to build it in Brazil, or you have to build in China, because we're the ones mining that material and we want the high paying jobs. That's gonna be a big problem. And I wouldn't be surprised if you start to see that, because again,
I did an interview with a tech publication about a year ago, and I made that exact point, that these tech companies, to produce what they need to produce, they need the miners. And remember when we saw years ago that the oil and gas guys were getting into the mining side of things? I think the tech guys are going to have to do the same thing as the oil and gas guys did a long time ago.
Exactly. That's exactly what they're going to have to do. They have to get access to those resources, because at any point in time, they could be cut off. And if Tesla can't produce cars, and I have a Tesla, I really love Teslas, but if a Tesla can no longer produce any cars because they don't have access to nickel, well, then what do they do, right? Because, there's huge amount of impact to the economy. So, as you point out, the revenge of the miners is coming, and maybe it's not the revenge of the miners. Maybe it's really the heyday of the miners again, because the miners are really going to drive the future of the economies, but they're not seeing the value that they should be. And I think going forward, you're going to start to see more and more smart money moving into the miners and securing these resources, because it's going to become absolutely critical for the next 10 to I don't know how many years down the road, but it's going to be critical
brings
going
us
forward.
full circle back to Dalradian. This is the kind of way that you used to build gold mining companies. You're following that path, and you're following it, and not only you're following it that path with the right share structure to reward shareholders, but you're getting it with the truth machine.
Exactly. And I'm going to use the old Bitcoin and tech concept where stocks never go down, commodities never go down in price either. So I always say this on Twitter, zoom out at the chart. Well, if you zoom out at the chart of gold or copper, we're at much higher prices than we were 50 years ago, obviously. So
even in my career, I remember
exactly.
60 cents a pound copper.
Yeah, exactly. So the metal's in the ground. It's not going anywhere. So why do I need to produce all that today? Let's keep it in the ground. Let's generate positive cash flow, and we manage the risk. And I'm sure investors have been turned off by these $300 million projects becoming $1 billion or 500 becoming $2 billion, because we've seen them all. Let's start small, rebuild that investor confidence, because we know metals are going to continue to go up in price. They always do. If you buy great ground, the value of that ground is not going to go down, provided you got a valuable resource there.
Well, you guys keep going out there, Mario, and finding that high-grade gold, and with high margin potential and jewelry box potential, and keep your share structure reasonable. And I think you've got a recipe for success.
Exactly. Well, look at we drilled 3,000 meters. Look at all those holes. They're all fairly great holes. Yes, we got a couple of 7-gram hits in there. I think we had one 5-gram hit, 10-gram hit. But damn, if I'm worried about a 7-gram being one of my low grade hits in a 3,000 meter drill program at 2 veins and identifying parallel structures, I know I'm on the right path.
You keep mining it, you find that 5-gram gold, and right beside it sitting some 35-gram gold. You're making nothing but money there, Mario.
Exactly. And that's my point.
I wanted to make one point before we close, is that recently you guys had a great webcast that I'm sure is on your website, and I invite our viewers, go check it out, because you're 2 key geological minds behind this team, and what you're doing gave a lot of great information, Mario.
Exactly. And Sarah Coulter, who is our chief geologist and QP, and she's the one that, she's exceeded all of my expectations when I came on board about 11 months ago with Galantas. And look, I like the project. I like it many multiples more now than I even did then, just because I understand these dilation zones, and I didn't anticipate, or we didn't understand it back a year ago. So this is clear that there's going to be potential for jewelry boxes. And then John Arthur's, who many consider, one of the most knowledgeable people on Dalradian rocks in this area, the 2 of them really tried to explain why we think we're on a major trend. And they're talking about not only Galantas, but also Dalradian, where they think we're going to find the gold, and why we think this could be another world-class district. And, I don't use that word lightly. I know we all do as miners and explorers. We all want to be in a world-class district. But I think, when you hear it from the geos saying there is real potential here, it's just been a lack of work in this area that hasn't been able to get there. But we already got one world-class asset already, and there's no reason why you're not going to find more of these mines. You always do.
Great note to end it on, Mario. Thank you very much for joining us today. And I'm going to close things off, but keep going at it, Mario. You guys are doing awesome.
Thank you. And thanks for having me on again. I really appreciate it.
We'll have a chat at the end there. I'll just close things off now. And I'll do that by saying, Mario in the close there mentioned something that when I started this by talking about the progression of what I saw high grade, I saw similarities to Dalradian. They kept drilling. I saw continuity. They keep drilling, and now we see predictability of these dilation zones where you can find those jewelry boxes, and they're getting a handle on everything with the cross structures, the main structure. And I think they're going to find a lot of high-grade gold here. And then you look at the business plan. I hear a lot of companies talk business plan, but one of the key indicators that I look for is to get rid of all the talk, just look at their share structure of any company you're looking at. And that is a separator between BS and reality. You know, a lot of these companies are talking about their business plan, but they got 250, 300, 400 million shares out. Mario is the voice of experience. He's talking about becoming a miner with 83 million shares out, a high margin miner with 83 million shares out and a $36 million valuation. If you're looking for gold stories that have the potential to be multi-baggers, I mean, even at a 10x, that's only a $360 million valuation. The kind of companies that Mario is talking about building, they have billion-dollar plus valuations. So do your homework as always. I mentioned that this show's for information purposes only. You need to speak with your financial advisors, but I'm a big fan of investors understanding what they're investing in. And the way to do that is to do your homework. Go to their website, look at that webcast they recently did, look at all their news releases, look at their corporate presentation, and I think you'll find why Mario and I are of a like mind of where this company is going to in the future, and that's becoming a much bigger company. On that note, have a great day, and we will talk to you soon.